All right, let's take a look at the trade setups. So I just went over on how to trade a fair value area gap for you members, right? So what a fair value area gap is, in summation, really short, is it's a 3-candle sequence. So the first thing we want to do when the New York opens up, we want to look at a 3-candle sequence when there's a gap in between the wicks of a 3-candle sequence. That's pretty much how you do it. So at 9:30 opened up here. This is a 9:30 high. And you can do this on the NASDAQ futures. Works really well on the NASDAQ futures because it's really a lot of volume at the first 5 minutes of the open. And here's the 5-minute low at 9:35. So here's the first 5-minute opening range. There's your first 5-minute opening range right there. Now what we want to do inside that first 5-minute opening range is I know if I break outside of the first 5-minute opening range, I can look for a break, retest, and try to take this short opportunity here. If I ever break back inside of the opening range and retest it, I'm looking for a long back to the other side. But what we can do is we can find out where the market's trying to find fair value and see what direction the market is actually pushing to help our entries off of our algorithm. So we can find the direction of the push of the market right away, just from the 5-minute opening range. And what I'll do is I'll find out the distance between a 3-candle sequence and the distance on the wicks. So if you look at the sequence, 1, 2, 3 sequence here, these 3 candles, there's a gap in between the low of this wick to the high of this candle. That's a fair value area gap. The market around 9:40 did a 3-candle sequence here too. 1, 2, 3. Look at the low of the wick here. Yeah, let me show you. The low of the wick to the high of the wick. That is a fair value area gap. So that lets me know that the market can come back up and retest as long as it doesn't close above that fair value area gap by a whole body candle close. That's going to be a downtrending market, right? Which created an opportunity to go short off of our lower Renko here. Here was a short setup right here, which I'll go over in a second. So we had a short setup here, breaking through the low, breaking first initially the 5-minute opening range. And then we had another short setup right there on the retest. All right, right now the bears are in control. Why? As long as this fair value area gap holds, and I don't close by a body of candle above this fair value area gap 5-minute opening range, the bears are in control. If the bears are in control, I'm just going to keep shorting the market. Now let's look at entries. So that's how you do a 5-minute opening range. I'm going to go over every week for you. 5-minute opening range, fair value area gap on the 5-minute opening range. Okay. So how can we break it down into entries? Let's go over this first of all. So here's our chart. We got into this morning and we're right here at 8:30. These are levels you want to trade off of. You want to trade off the high value area break with a smaller Renko candle. And I'll show you how to do it in a second. You want to trade it. Here's another buy signal we had. Broke our PP, these dots. So these are 2 big inflection points that were buys. This is a buy here off of our yellow trigger entry. 30-minute trend was up right here. That was a buy signal. That's a buy signal. That's a buy signal. Why? Because they were all on major market profiles levels. Control point, high value area break, price profile break. They're all buys. Then we had sells. I'm going to show you how to use this off of the smaller Renko. I just want to show you with our algorithm, you should be trading off key inflection points on a daily basis. Key daily inflection points off a daily basis. So what we're going to do is we're going to come and trade off these levels. Now we broke back inside. We broke back inside of the price profile here and retested it. So this one was another sell signal off the 166 lower Renko with a small stop. Then we broke inside my developing profile, retested it. I'll show you that entry. Then we broke the control point, retested it. That was an entry. Then we broke the low value area, retested it. That was an entry. And now we just got to retest off of our 5-minute opening range fair value area gap, and it retested it right to the tick, right there. So we had 1, 2, 3, 4, 5, 6, 7, 8 inflection points. Now this is off a 5-minute chart trying to find the inflection points. And where did I say the market's trying to gravitate towards? At 8:30 this morning, I said this is a fair value down here where it's going to try to get to the downside. This is a fair value where it's going to try to get to the upside. How do I know that? It's previous market profile. This is where all the participation is. And that's where they try to gravitate the market towards. So all we got to do then is this. We just got to trade off of our inflection points with a small Renko size with smaller stops. And we got to try to trade them into these fair value area gap targets. So that produced this type of level. So let's take a look at this. Let me scan this down. So I went over a low volume node in a previous video. I'm not going to go over it in this video, but the low volume node was right there in the morning. So let's go through these trade setups this morning, and I'll bring it down to the smaller Renko chart for smaller stops. Let's just take a look at this, just so you understand it. So here was our yellow trigger entry. Trend is up. Very self-explanatory. We got tons of videos on it. This was high value area breakout. It moved up. At the time, it was below this. It closed 2 candles. I had a liquidity grab pullback. That was an entry. This was a low volume area node at the time before it moved up. This is an entry. This is a PP breakout. You have a big intra-bar pullback. Once it closes, that's your entry. Your stops are always below those liquidity grab pullbacks at these inflection points. What did the market do? The market closed back inside of my price profile over here. Closed back inside of it, and we're looking for the retest. Right there's a retest. That's your intra candle right there, and close below it. There's your entry. At the same time, consequently, it closed below our low volume node. Intra candle, sell. Intra candle, close, liquidity grab, sell. And it closed back inside our HVA. These are big inflection point sells. Same thing. It got up intra candle into our PP here, price profile, into our high value area here, and into our low volume node. 3 times resistance. Closed down, another short signal. Then it broke our control point, another entry signal. We start cranking down. Then it broke our low value area here, broke down. Now I'm going to show you this on a 166, how we time our trades. Now watch this. Here's another sell signal inside of our zone. So we can use a smaller Renko chart to find when you hit these inflection points, how do we get in with a small stop? Let's take a look. So this is a 116, or you can use a 166. It doesn't matter. It's an UniRenko bar. Ninja has this. This is a free UniRenko bar that Ninja offers. You can download it. This is a 116 I like to use for entries on the S&P at these inflection points with a small stop. So I just told you over here was our trend zone was up. Here's a buy point. This is the breakout of the low volume area node, which I just showed you, and the high value area. Break, retest. There's your entry, stop below it. Then it got below the low volume node and the high value area. The first retest, red candle. There's your entry of 6907.5. Your stop was 09 and a quarter, 09 and a half, 2 points, 2-point stop. What I educate is 10 ticks. A 10 tick stop on a 166 to me suffice. Some traders like using 12 or 13 ticks. That's fine. Anywhere between 10 to 13 tick stop on this trade setups at these inflection points are fine. You don't need big stops with this inflection point trading. So got inside HVA low volume node, retested, inside, retested, inside, retested. And then it broke again, broke inside a low value area. Low value area, high value area. Another one, it moved down, another short. Then we come down and we break right there, low value area on market profile. It broke below it, retested, closing that candle short, 94.5, got as low as 91. Then it got back inside of it again on a perfect retest right there. It stopped right on it for a retest. And this is the break of the opening 5-minute range, another short. And here's our retest of the 5-minute opening range, short, short, all with our trend filter. So this is all with our overall trend filter. These are all trade setups. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. These are all break retest trades. Oh, I missed this one. Inside of these major inflection points. Okay. Now I just showed you this 5-minute opening range is important. It's a 3-candle sequence. I can find the fair value area gaps. Here's one, the fair value area gap. We know, based upon market order flow, the fair value area gap will tell us if this market's going to strengthen. I got to close a whole body candle close. Not only am I below my 5-minute opening range, I got to close above my fair value area gap there of 68.90. Until I do that, there's no reason to go bullish on this market. It looks like it's going southbound on the Greyhound, right? We don't think this. We only think this. Short, 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 short. Order flow, the market always tries to find fair value. So what it's doing right now is trying to find the next fair value point. As long as I don't close above this fair value gap, which is now between 88.25 to 90, short side setup. And then what we can do is we can trade off these inflection points. Now, you just don't want to trade off a 166 by itself and just blindly go in and start buying and selling. You only trade off this chart if there's major inflection points off of our algorithm, off of our market profile. Here's your inflection points. Control point break, HVA break retest, PP break back inside of PP, break retest on PP, break inside retest on the developing profile, break below control point, break retest low value area at the time because this was a low value area. I mean, the control point, break here of the low value area or break retest of low value area. So in other words, what we're doing is we're only trading at key market profile levels here, 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 and using a 166 to pull us in with a small stop. So what you can do, just off of 166, draw your lines up right there. Find out where the high value and low values are and draw them right on your 166 chart. Draw the low volume nodes right on your chart. Draw the 30-year back-tested trend filter and zones right on your chart. After the first 5 minutes of the opening range, draw it on your chart. Because after the first 5 minutes of the opening range, I told you today, we're going to find the exact inflection point where this market could have a trade set up. We did. We looked at the first 5 minutes. There's a break retest in the first 5 minutes. That's a big trade. 91 down to 80. 11 S&P points. There's a first retest of the 5-minute opening range. It's with our 30-year trend filter. And if you're going to take these, the best are with 30-year trend filter. And that's how we do it. We can use a lower Renko size to time the trades off key inflection points. And we can judge the bias, not some moving average bias. We can use market profile bias above and below HVA, and we can use fair value area gaps, FVGs, and inverted fair value gaps, because this will be an inverted fair value gap. If I start closing above this fair value area gap right here, if I start closing above it, I'm immediately looking for the retest for long to take out the highs. If that happens today, you're looking for that market to go straight back up, which could do it. But until that happens, you're looking for southbound on the Greyhound on the S&P. We're below the 5-minute opening range. We're below a low value area. We're finding fair value on our market profiles. Here's our entry chart to give us small stops. This fair value area gap right here, it was known at 8:30 this morning. It's already 10:15. I know my targets before they happen. Why? I'm not guessing. I'm looking at the previous market participation right here. They're magnets in the market. These previous market profiles are magnets. Price gravitates towards these magnets. That's not my opinion. It's not your opinion. That's order flow. When I said we'll trade the opening range, 5-minute opening range, this is not my opinion that the market's bearish. That's order flow. Because what they do, they trap all these traders down here. They trap them. Trap all these traders that trade the 5-minute opening range just by selling it on the break, right? Which we did. You can do that. But the best trade is a retest. Come up into the fair value gap. This is where you want to get short. This is the highest probability, lowest risk trade right in here. Right there. Right on the retest of fair value area gap. That's what we want to see. Okay, Gerald, shut that off. We'll keep going over this every week, but use the 166, guys. Use the 166 as an entry technique at these key inflection points with small stops. And your stop is 2 ticks or 1 tick above the swing low or swing high. It's that simple. Don't make it any more difficult than that. How to trade off 166 UniRenko at key market profile levels. Okay. Terrence, you understand now? We can use a lower Renko size of 166 to trade these inflection points. Leo, you understand? Stu, you guys understand? Russ? You guys picking it up? We can use lower Renko sizes to find these big inflection points, right? And that's going to create smaller stops. And what we can do, we can use the 5-minute opening range for additional trades, right? The first 5-minute opening range. But we can see with the fair value area gap, the bias of the market. I know what the bias of the market is right now based upon order flow, not my opinion. Now, if I start closing above this fair value area gap, I got to switch gears. This market could short cover and go all the way back up. And what I want to do, break, retest, buy, break, retest, buy, break, retest, switch my gears to the 166 chart and just start buying every pullback at key levels. But until I close above this FVG, there's one thing I'm thinking. South, right? Short. The bears are in control right now. Until I get back inside a low value area, inside my fair value area gap, the bears are in control. Okay? That's all we need to do on a day-to-day basis. All right, let's get some ticks, guys. Any questions, let me know. Replay that video. Hopefully that helps you out. And any questions, let me know. I'll be back.